Solana is actually being used, and it is growing across virtually every metric. In the first quarter of this year, Solana recorded its highest ever level of network activity, 112 million daily transactions, up 15% from the prior quarter. And last year, Solana settled 2.7 trillion in on-chain volume. These are big numbers. For those of you new to Solana, Solana is financial infrastructure on which assets are issued, transferred, and settled. Any asset, a treasury bill, a share of stock, a stablecoin. If it has value, it can be issued, held, and traded on Solana. Institutions keep choosing Solana for 3 reasons: speed, cost, and reliability. On average, the network processes thousands of transactions per second with finality under 150 milliseconds. In real-world stress testing, it has hit 100,000 transactions per second. A transaction costs a fraction of a cent, predictably, regardless of what else is happening in the network. And the network has maintained 100% uptime for over 2 years. So what's actually happening on Solana? Let's start with stablecoins. Over a year ago, the total stablecoin market cap on Solana was $5 billion. Today, that number has more than tripled, the fastest growing growth rate of any blockchain. These dollar-denominated instruments are being used for real payments and settlement at scale right now. Then there are equities. Superstate's platform lets SEC-registered companies issue shares directly on Solana. Galaxy Digital has done this. Ondo has brought more than 200 tokenized US stocks and ETFs to the network. In total, Solana now handles more than 95% of all tokenized equity trading volume across all blockchains. And then there are the real assets beyond stablecoins and equities: US treasuries, money market funds, and private credit funds, settling in seconds instead of days. Total tokenized real-world asset value on Solana has reached $3 billion, more than 3 times where it stood just 6 months ago. What I find most telling is who is making these choices. It's not just crypto-native startups or venture-backed protocols. It's also Mastercard, Western Union, WorldPay, the state of Wyoming. These are institutions with massive customer bases, compliance departments, and real reputational risk. They look at every available option and choose Solana's rails. That tells you something no price chart can. When treasuries, equities, and payments all settle on the same rails, capital can move between them instantly without leaving the system. A position in one asset class becomes collateral in another. Settlement that took days happens in seconds. This is a different financial system, a better financial system, and Solana is the infrastructure where it's being built. For the first time, institutions building on the infrastructure have real regulatory visibility. The Genius Act, the Clarity Act. The work isn't finished. Senate passage of clarity and implementation rules lie ahead. But the direction is clear, and that matters for every institution deciding whether to build. The institutions that understand financial infrastructure best have looked at what's available and they're building on Solana. If you aren't already paying attention to Solana, today is a good day to start. The real work is just getting started. Thank you.